Hi, we are having a conversation with Birgir Pétursson. He is the founder of the Center for Social and Economic Research in Iceland. The simple interpretation of what has happened in Iceland is that the market economy failed. But I am sure that you can provide us with a deeper perspective.
Yeah, I think that that is a very oversimplified to talk about it in that way. That the Icelandic financial crisis and the financial crisis in general was because of some kind of market failure. It is obvious to everyone who wants to analyze it and research in these issues and in this area that this was a mixture of intervention by governments, central banks, decisions by bankers, and a mixture of causes that led to the financial crisis. And it is very difficult to say that it is because the market economy failed. You know, there are more factors in play there.
And what are these factors?
Now, to begin with, in my opinion, the central banks of the world, they created a lot of credit and increased the money supply dramatically, lowered the interest rates, for example, to stimulate the economies of the world. This led to, in the beginning of the bubble, of the financial bubble, that there was money flowing all over the world, everywhere, and it was very easy to borrow money for any company, financial institution, and as well, the central banks and governments of the world gave they assured everyone that they would bail out the banking system if it failed. Now, this led to overborrowing, and it also led to risky behavior. Now, it is also important to look at the regulation at play. Banks were very regulated companies, and there was a substantial amount of legislative acts that banks all over the world, in Iceland, in the European Union, and the United States, had to look at and adhere to. And I think that a lot of this legislation has to be analyzed properly to see if there were incentives in the regulation that led to more risky behavior. Now, it is of course very important not to forget that the banking sector and the private sector took those decisions and of course have to bear some responsibility. Now it seems like the governments of the world, the central banks, are going to bail them out, so they won't have to bear this responsibility, at least not all of them. But looking at the causes, I think, for example, for the Icelandic case, you have to see it in the context of the global financial crisis and what was the institutional framework for financial institutions to operate within.
And you have mentioned bankers, and one has the impression that private bankers behaved in a very risky manner, and they behaved in a destructive manner. Why is it that this happens?
Of course, we cannot say that all bankers all over the world did it. We cannot brand bankers as there were many banks that behaved in a prudent way, and we must not forget that. Now there were many bankers, however, who took risks, and I think that we have to look into the incentive structure, the regulatory regimes that we had, whether they were flawed and led to increased risk-taking by the bankers. But of course, you have to acknowledge that there was so much money flowing around, and governments sent the message that it would continue eternally, almost.